Well, thank you again for Nevin for having me for the library to host us. Our webinar. We are going to be talking about credit reports and credit scores. And as Nevin said, my name is Alessandra, and I'm a housing counselor at Habitat for Humanity East Bay, Silicon Valley. So just a little bit about who we are and what we do. Habitat East Bay Silicon Valley is a nonprofit, and we serve people in Alameda, Contra Costa, and Santa Clara counties. And we do this through 3 programs. One, first we offer homeownership opportunities, affordable homeownership opportunities. We build new homes and we renovate existing homes, and then we sell them at an affordable mortgage to qualified families with limited and moderate incomes. We also offer housing counseling services, and through our owner-occupied home repair services, our home preservation program provides grants and low-interest loans for low-income homeowners throughout our service area. And I wanted to tell you a little bit more about our housing counseling program. That's the program I work in. And our program is certified by the U.S. Department of Housing and Urban Development, also known as HUD. And our services include one-on-one counseling, financial education workshops, how to approve first-time homebuyer classes, and online financial education. Now, one-on-one counseling offers free individualized guidance. Clients work with a dedicated HUD-certified housing counselor, and they learn strategies for managing personal finances, including how to create a sustainable household budget, how to start a savings plan, manage debt. We also offer credit counseling, and that teaches how to understand the credit report, how to build or rebuild a positive credit history. And we also offer pre-purchase counseling to help people who are thinking of buying a home or would, have a goal of buying a home at some point, understand how the home buying process works and how to become financially ready to purchase a home. We offer financial education webinars like the one we're presenting tonight. We do this through our website, but we also partner with agencies and nonprofits throughout our service area, including the Santa Clara City Library. And we also offer a free online financial education center. And these are interactive lessons that you can take at your own pace and at your own time that cover a variety of financial education topics. And I'll tell you more about our financial education center at the end of the presentation. But today we're going to talk about the credit report. What's in a credit report? We'll talk about credit scores and what you can do to help your score, and what you do that can hurt your score. Conversely, how to dispute errors and clear collections, how to build a good credit history, and how to protect your credit. So credit reports. Now, your creditors and lenders report your credit history to the credit bureaus, and they're also known as credit reporting agencies. Now, then the bureaus collect the data, they list the information on your credit report, and then assign your credit score. And then the 3 main bureaus are Experian, Equifax, and TransUnion. Now, every time you apply to borrow money, submit applications for things like a credit card or car loan, or even rent or cell phone services, creditors and lenders access your credit report. They want to know, can you be trusted to pay them back? And your report shows your present and your past credit history. And the accounts listed are your credit references. They show how you handled debts in the past. How are you handling them now? Do you pay them? Do you pay them on time? Now, when your report is pooled for lending purposes, for example, if you apply for a credit or a loan, then it counts as a hard pull and it will impact your score. When the report is pulled for information purposes only, for example, if you check your own credit report, then it's considered a soft pull and does not impact your credit score. Now, the credit bureaus can give access to your credit report only if there is a valid need. So lenders and creditors, of course, will pull it when you submit an application. They may also review it if, for example, they anticipate an impending risk based on your recent payment history. If they think you have become a higher risk, then they may increase your interest rate or lower your credit limit. So, for example, let's say you were paying on time and then all of a sudden you start having some late payments. That may be a red flag for them, that there may be impending risk. So they may review your credit report to see what else may be going on. Now, landlords also may use it as part of the decision process on whether to approve your application. It helps them assess the likelihood that you'll pay your rent based on your borrowing history. And they may also check your rental payment history records on top of that. Utility companies may check your credit history when you submit an application. And if you have a negative credit history, they may require a large deposit. Banks and credit unions may check when you apply to open a checking account, in addition to checking information about accounts you've had in the past to see how you handle them. Employers may pull your credit report as part of a background check for hiring purposes. And when you apply for insurance, the company will check it. If you're considered a higher risk, they may quote you a higher premium. And then, of course, you can access your own report. And we'll reveal a little later how you can pull it for free from each of the credit bureaus. So let's go over some credit myths. So one myth is that if you check your credit history reported by one bureau, you will see your full credit profile. Now, your creditors and lenders are not required to report your credit history to all three credit bureaus. They may choose to report it to one, two, or none of the bureaus. This means that if one of your accounts is only reported to Equifax and you pull TransUnion, you will not see that account's history and you may miss important information. So for example, let's say you have an account that has gone into collection, but it's reported only on Equifax. You check TransUnion and Experian and you don't see it, so you think all is okay and you submit a rental application. Now the landlord also pulls Equifax, sees the collection, and denies your application. So if you had known it was there, then you could have done something about clearing it before applying. So if you really want to know everything that's being reported, you do need to see all three. Another myth is that when you pay off a debt, like a collection, the account is immediately removed from your report. The account will stay on your credit report until the end of the reporting period, which can be 7 to 10 years, depending on the type of debt. However, so the good news is that lenders and creditors will look at paid debts more favorably, and it will make it easier for your application to be approved. So even though it doesn't fall off, it'll get updated saying paid, and so that's going to look better. It's going to help. It's also a myth that credit scores are all the same. There are many scoring models. For example, the Vantage score was developed by Equifax, Experian, and TransUnion. The FICO score is the one that is typically looked at whenever you apply for credit or a loan. Now, that means that if you are planning to apply for a loan that requires a minimum FICO score of 680, and you want to check to see if you meet that requirement, then you need to make sure that you're checking your FICO score and not, let's say, your Vantage score. Because if you check the wrong scoring model, then you won't be comparing apples to apples. It's also a myth that closing credit cards will improve the credit score. It can actually end up hurting it, and we'll review how in a little bit. Co-signing on a loan means that the person you co-signed for was not able to qualify on their own. The lender or creditor then approves the application based on your credit history. Essentially, they're approving you. Now that means that you're 100% responsible for that debt. And if the person you co-signed for does not pay then or pays late, then that late payment history will be reported on your credit report and your credit score will drop. The creditor could decide to sue you or sell the debt to collection, and both have significant negative impacts on your score. Also, because the account will be listed on your credit report as a debt that you owe, it may impact your ability to qualify for loans or credit. And you can't say, well, the other person's responsible for paying. You are based on on the contract, you are both equally responsible. So what's included in a credit report? Now, the credit report is a record of your credit history, and it includes the following information: your personal information, like your name, your social security number, your date of birth. It includes all the credit inquiries. This is when you apply for credit. The creditor or lender will pull a copy of the credit report in order to consider your application, and then this will be reported on your credit history. It also lists information about all your accounts, both open and closed, including any public records and collections. And it also includes credit bureau and creditor contact information in case you need to get in touch with them. So let's review a sample credit report. Now, keep in mind that not all credit reports look the same, but all credit reports will include the same sections. Now, Section A lists this person's personal information, their first and last name, their address, their date of birth, their social security number. Now, this section may also include employment and address information. Every time you apply for credit, you provide information about yourself, including your address and place of employment. And then over time, you build historical information, places you've lived at, employers you worked for, names you used to apply for credit or loans. And then this information may or may not be up to date. But it is important that you check it because you want to make sure there isn't any information listed that does not belong to you. Because this may be a red flag that someone's tried to apply for credit under your name. Section B shows that this person placed a fraud alert. Now that means that if anyone applies for credit or a loan, the creditor must contact them via a contact method of their choice, like a cell phone number, and to verify that they're the ones applying for credit. And then we'll talk a little bit more about this, the security alert. So consumer statement, Section C, it includes a consumer statement. Now in this case, this person used it to explain why they missed a car payment. Now you do have the right to include a 100 words personal statement to your credit report. It allows you to either to explain the circumstances that contributed to your financial situation, to the delinquency, or to dispute something on the report. Now, it does not affect your credit score. One thing to note, though, find out, if you want to put a statement, add a statement, find out when that statement automatically drops off or how to remove it. Because you probably don't want to alert lenders to credit issues you had in the past that you've since resolved. Now, Section D is the creditor information. These are all your accounts, including their open date, the credit limit, the monthly payment, the balance, the type of account. For example, is it a credit card account or a loan? It will also include information about your payment history on that account and the date of last activity. Now, I want to point out one account. The auto finance company account has a past due history. Now, this is considered a red flag for a creditor or lender, might impact your score negatively. Now, this is why this person included that statement in Section C. They wanted to explain that they didn't miss it out of negligence. It was due to a medical event that temporarily impacted their ability to keep up with the payments. So that's how a statement can help you. Now, Section E is the public records section. This report shows a lien that was filed in 2003 by Fulton County and released in 2007. So this was likely a tax lien, and it means the amount owed was paid. That's what released means. It was, the account was settled. I would like to point out also that as of April 2018, tax liens and civil judgments are no longer reported on credit reports. Now, this means they no longer impact the credit score. However, it does not mean that you no longer owe the money, nor that whoever you owe money to cannot pursue legal action. Nor does it mean that the records are not accessible by creditors and lenders. So there are other places where they can check these things. This person also has a bankruptcy listed, which was discharged. Now, this means this person is no longer legally required to pay the debt, the debts that were included in the bankruptcy filing. In section F, there's a collection account. This section will also include accounts marked as profit and loss or charge-offs or maybe repossessions. Now, some people think that, oh, it's a profit and loss, a charge-off, it means they wrote it off their books, so I don't own it. That's not true. These types of debts are still balances owed. You owe that money. And if you don't pay them, then they could turn into collections, which would have an additional impact on your score. So don't ignore those. Section G lists the credit inquiries. Now keep in mind that credit card pre-screened offers you receive in the mail will show up as inquiries on your credit report, but they do not impact your credit score. However, if you decide to apply for that credit card, then your credit report will be pulled and that will then be considered a hard inquiry. So then it will impact your score. Now, your score, obviously, the higher your score, the better. These scores are based on the FICO scoring model. If you're applying for a loan or credit, this is, again, the most reliable because it is the one that's most commonly used. A score that's in the 700 is considered good. Of course, the higher the score, the greater your chance your application will be approved and the better interest rates will be quoted. When it comes to credit scores, time is your best friend. Anyone can have a good credit score. It just takes time to correct what needs to be corrected and get back on track. And you just need to know what it is that you do that can help it. And we'll review that. Sorry. I have allergies and sometimes my voice just goes. Here's the credit score and what impacts it. The credit bureaus don't give us their formulas for calculating their credit scores. However, they do tell us what we do that can have a positive or negative impact. Now, the largest impact on the credit score is your payment history. Do you pay your debts on time? Do you pay all your debts as agreed? Having a late payment history or outstanding debts like collections reported, then will bring your score down. How much debt you owe on your credit cards has a 30% impact on your credit score. This is also referred to as the credit utilization ratio. Borrowers who habitually max out credit cards are viewed as risky. It's a red flag that they cannot handle debt responsibly. And here's really where people get into trouble the most often. And that's because credit card companies require us to make a minimum monthly payment, which is based on the balance that we carry. And that amount is usually really low, so low that it tricks us into feeling comfortable to keep charging because we know we can afford it. So a good rule of thumb is to keep your credit card balances at no more than 30% of your credit limit. Now, this means that if you have a credit limit of $1,000, you should not carry a balance higher than $300. And of course, the lower, the better. Now, the good news is that your credit score can improve quickly as you pay down your balances. The length of credit history has a 50% impact on your credit score. A short history does not mean that you cannot have a good score, but the longer it is, the more information is available about how you handle debts, which can help increase it. To know how old your history is, just find on your credit report the account that has the oldest open date, and then that's when your history starts. New credit has a 10% impact on your score. That's when your credit report is pulled because you have applied for credit or loan. Every time you apply, your score gets a hit. If you try to open too many accounts within a short period of time, it's considered risky behavior, and your credit score will go down. And that's because you have the potential to take on new debt without having demonstrated how well you would be able to pay it off. And then types, last but not least, types of credit used as a 10% impact. The three types of accounts that are reported on a credit report are installment accounts, which are loans, revolving accounts, which are credit cards, and mortgage accounts if you own a home. You don't have to have all three types, but having what is called a credit mix can help your score. And that's because it shows how you handle different types of debts. Again, more information about you and how you handle debts. All right, so let's go over an example of the credit utilization ratio. Now, this ratio is calculated by dividing the balance owed on a credit card by the credit limit. The score looks at two types of credit utilization ratios, the per card and overall. Per card utilization looks at each individual account. It measures how much of each card's credit limit you're using. And then overall utilization looks at all your accounts combined, how much of your total available credit limit you are using. So here's an example of how this works. This person has 3 credit card accounts. Credit card number 1 was opened in 2010, credit card number 2 in 2013, and credit card number 3 in 2017. All 3 accounts have 3,000 credit limit and a balance of 900 to make things easy, which is 30% of the credit limit and within a safe range. Now the total available credit limit for all 3 cards is 9,000, and the total, balances is 2,700, which is 30% of the total credit limit, and again within safe range. But now credit card number 3 sends them a balance transfer offer. If they transfer all their credit card balances to their card, they offer a 0% interest rate for 12 months. It sounds like a good offer since the interest rates on all 3 cards is very high. So they decide to transfer the balance from card 1 to card 3. Now, as a result, the balance on card 3 increases to $1,800, which is 60% of its credit limit. They also decide to close card 1 because they don't want to have so many open accounts. Now, because they think they're doing the right thing, they do the same on card 2. They transfer that balance to card 3 and close the account. Now, card 3's balance is 2,700, which means they're using 90% of the available credit limit on that account. Also, because they closed card 1 and card 2, those credit limits are no longer available to them. So their overall available credit limit went from 9,000 to 3,000. And that means that their overall utilization ratio is also at 90%. The score will drop at each step. Now, closed accounts eventually drop off the credit report. So when credit card number 1 and card number 2 are no longer reported, their oldest account will be the one opened in 2017. And their length of credit history will shorten by 7 years, and the score will drop again. So the general rule of thumb, pay off your balances and keep the accounts open. To preserve the length of credit history, identify the accounts with the oldest open dates, and then keep those cards active by using them from time to time, maybe every 2 to 3 months, charging small amounts that you pay off in full when they're due. The other cards, instead of closing them, just shred them. The creditor will eventually close the accounts if there's no activity, but the impact won't be as drastic as if you were to close a number of cards all at once. Now you are entitled to check your credit report for free from each of the 3 credit reporting agencies every 12 months. And actually right now, due to the pandemic, the bureaus are allowing people to pull their credit report for free once a week. I believe it's through April 2022. You want to make sure you know what is reported. It's very important to check your credit report. Check if there are errors listed, dispute them. If you have high credit card balances, make a plan to pay them down. If there are debts you owe, like accounts that have gone into collection, profit or loss, charge-offs, make a plan to pay them. Fix anything that will help you build a positive credit history and raise your credit score. Now, your credit report is also where you can find if there is an activity that may indicate evidence of ID theft. So red flags like accounts you never opened, names listed used to open accounts you never used. So to get your free copies, you go to annualcreditreport.com. This is the official site where you can get your free copies. So beware of sites that look very similar and ask for payment, because it shouldn't cost you anything if you order it from the official site. You have to request each bureau's report separately. You can pull all 3 reports at the same time, but if you space out your request, you can get a copy of your credit report throughout the year. So, for example, in January, you pull Equifax. In May, you pull TransUnion. In September, you pull Experian, and then in January, you start all over again. Now, I mentioned earlier that if you want your full credit profile, you need to pull all 3. So if you've never checked your credit reports, or you haven't checked them in a really long time, then you might want to have a full credit picture, especially if you just want to know what's going on. And then after that, you could start you have to wait 12 months, but after 12 months, then you can start doing the January, that kind of spacing them out. Of course, right now you can pull them for free once a week. So it's a great time to check. Now, the credit bureaus do their best to maintain accurate credit information, but the reality is that errors can occur. Most of these errors have to do with wrong data reported by data furnishers like creditors, banks, lenders, collection agency. If the information reported to them is wrong, then the bureau has no way of knowing unless you tell them. Bureaus too can make mistakes. For example, they could accidentally mix the credit files of 2 consumers who have similar names or similar addresses. Other errors are the result of ID theft. The bureau won't know the account is fraudulent unless you let them know. And so the dispute process allows you to correct these errors. If you find wrong information listed on your credit file, you need to dispute with the credit bureau or bureaus reporting it. So they can be submitted by letter or online on the bureau's website. There are online templates, letters you can use. And you can check out the Consumer Financial Protection Bureau. They have template letters that you can use. First, you want to identify the error or the errors. Then you write your dispute letter or go to the Bureau's website and follow the online dispute process. So you could do this online as well. You want to include any documentation that helps prove your dispute, like proof of payment for collection, or a copy of your ID theft report to prove you're a victim of ID theft and that the account is fraudulent. You also need to provide information to prove that you are who you say you are, like your name and address. You also may need to provide additional identifying information, like your social security number, driver's license number. Now, to know what is required, the best way is to check the Bureau's website for details on their dispute process. You want to keep copies of everything, and if you're mailing your dispute, send it certified mail so you have proof of delivery. Now, once the credit bureau receives your dispute, it will contact the information provider, like the bank or the lender, the collection agency, to let them know that a dispute's been filed and then the specifics of the dispute. The information provider must then investigate to review the relevant information and then report the results back to the credit bureau. When the investigation is complete, the credit bureau must give you the results in writing and a free copy of your report if the dispute results in a change. You can also ask them to send notices of any corrections to anyone who received your report in the past 6 months. Now, the dispute, the investigation process must be completed within 30 days. You can follow up with the bureaus to check on the status if you haven't heard back. Keep in mind that the credit bureaus must report information that's accurate. So make sure you are disputing items that you know are incorrect. And be careful about credit repair scams. Don't go to companies that claim they do credit repair but want money up front. There really isn't anything that they can do that you cannot do yourself for free if you just follow the dispute process. Now, a debt collector is an agency contracted by a creditor to collect past due money you owe. It could also be a company that bought the past due debt from your creditor and then tries to collect the money from you. Debt collectors are legally required to send you a debt validation letter, which outlines what the debt is, how much you owe, and other information. So if you see a collection on your credit report and you believe the debt is not yours, then mail a dispute letter right away, because if you wait, you may lose your ability to dispute it. Now, if you're not sure you owe it, you need to get more information, including the agency's authority to collect the debt and details about the debt. You can send a debt verification letter requesting more information, including the collector's name, address, and phone number, any details about the debt, including who the original creditor was, their name, their address, the original debt amount, the total now owed, when the account became delinquent, when the collector obtained the debt. Now, even if you're sure you owe the debt, it is still advisable to verify it, because sometimes debts are sold and you want to make sure that you're paying the right collector. If you verify that the debt is yours before you contact the collection agency, make sure you have the funds to pay. Determine your financial capability. Do you have enough money in savings you can use? Make sure, though, that by tapping into it, you don't jeopardize your emergency funds. Do you have money left at the end of the month after paying all your bills and expenses? If there's no money left, then review your expenses. Which can you cut or reduce for a while to free up money, or maybe cut altogether? Figure out, if you don't have the money available, try to figure out, how can I free up money or find money that I can use to pay off this debt. Once you know you have the funds available to pay your debt, contact the collection agency to work out a repayment. Before you start talking about repayment, confirm the total you owe, because interest may have been added. You can try to negotiate a lower payment amount that fits with your budget, but keep in mind that the collection agency may not be willing to negotiate. So you need to be ready to pay the full amount owed. Also keep in mind that settlement offers expire. Now, whatever amount you agree on, you must be ready to pay it. If you don't, you risk restarting the statute of limitations period. Now, this is the period during which the collector can sue you. So make sure also that the payment amount clears your debt, and that you will have a $0 owed balance after paying it. After you reach an agreement, make sure you ask for written confirmation on both the total you owe and what you and the collection agency agreed you will pay to clear the debt. That's because, if later on, especially if you negotiate for a lower amount, and let's say later on you find that the debt is still showing up on your credit report, you want to make sure you've got that proof that you paid what was agreed on, that it's not your word against theirs. Now send your payment only after you receive this confirmation letter, and don't pay with money orders or cashier's checks, because you will not have proof they cashed it. Pay with a traceable method, ideally with a check. Mail payment with delivery confirmation, and request the collection agency send you a payment receipt acknowledging that the account has been cleared and that you have a $0 balance owed. Also ask the collection agency to contact the update the credit bureaus. Now, if they don't do that, if you don't get that second letter, that's all right, as long as you've got the paper trail from before. Because if they don't contact the credit bureaus to update the information, and you pull the credit report, say a few months later, a couple of months later, you see the information still showing that you owe it, and now you've got all the proof that you paid it, that you paid what was agreed on, that that you settled that debt, and so now you can go back to the dispute process and dispute it and send all the backup documentation. Make sure you keep records, paper trail, notes about phone conversations. When you're talking to the collection agency, write down what was discussed, maybe ask for the agent's name, write down the time and date that you talked to them. These are details that are easy to forget. Make sure you keep those records. And keep everything handy in case you need to prove in the future that you paid the debt as agreed, that you have a zero balance owed. So keep that stuff. Now, if you're sued by a debt collector, be sure to respond to court documents. If you don't, the court will usually assume you agree with what the creditor says, and you should get a judgment against you. And in that case, you may want to have an attorney advise you at the hearing. Now watch out for scam debt collectors. A real debt collector will answer all your questions, including their address and contact number. They'll send you a written debt validation letter within 5 days of initially contacting you. They'll tell you the name of the original creditor you owed money to, what kind of debt it was. For example, was it medical, how much the original debt was, and if interest was added, and how much it is now. And they'll work with you to determine the best way to pay off your debt. Sometimes they may even be willing to arrange payment over a period of time if you just can't pay it all at once. But again, keep in mind, they're not obliged to or obligated to negotiate with you. But you can definitely try to talk to them. Now, if you suspect a scam, stop speaking to the caller. If you're uncomfortable providing any information, you can request the caller's name, company's name, street address, and a callback number, and then you can use this information to verify that they're not a scammer before providing any personal information. Now, you can report problems with the debt collectors to your state attorney's general office, the Federal Trade Commission, and the Consumer Financial Protection Bureau. And know your rights. So let's watch a video from the Federal Trade Commission about what debt collectors cannot do.
Falling behind on your bills? Even if you owe more than you can handle, you still have rights. Most legit debt collectors follow the rules, but bad debt collectors don't. They break the law. So if you get a call like this,
"If you don't pay, we will have you arrested and deported."
Or this,
"This is your final warning. Pay up now or we'll contact your employer and make them pay."
hang up and report it to the Federal Trade Commission. You have the right to be treated fairly no matter what. That means debt collectors can't use abusive language, threaten violence, or harass you. Or call you before 8 in the morning or after 9 at night. They can't lie or pretend to be someone they're not.
"I'm an attorney and will take legal action if you don't pay this debt right away."
Or get you to pay a debt that doesn't even exist. They can't have you arrested or deported or tell anyone about your debt. Bad debt collectors like to knock you off your guard to get an advantage, create a sense of urgency, and rush you. They'll say anything to get you to pay right now. Instead, hang up and report it to the Federal Trade Commission at ftc.gov/complaint. We've stopped a lot of bad debt collectors. Help us stop more. For more information about debt collection, visit consumer.gov/debt.
Now, negative information generally stays on your credit report for 7 years, and then it drops off altogether. However, debt itself never expires and may fall off your credit report, but if the debt is never paid, then it never goes away. So they could still try to collect. Now, the biggest impact on your credit score is when the negative information is first reported, and then as time passes, then its impact diminishes. So bankruptcies will last up to 10 years. There are 2 types. There's Chapter 7. That stays for 10 years. That's when you walk away from your debt and don't pay anything. And a Chapter 13 will stay on your credit report for 7 years. That's when you enter into a repayment arrangement with the courts and pay off the debts. Late payments are reported for 7 years, foreclosure 7 years, collection 7 years, public record 7 years, hard inquiries 2 years, and unpaid tax liens, student loans can remain indefinitely because those are federal debts. As we talked earlier, taking care of debts doesn't make them go away your credit report, but it will help your credit profile because it will show that at least you've made good on your debts. Apologies. I don't know why we get some technical issues at one point. Here we go. If you have a poor credit history or short credit history, you are perceived as being a higher risk. So if you apply for credit or a loan, then your application may not be approved, or they may charge you a higher interest rate. So if you are just starting out building a credit history, or if you are rebuilding it, then the first place to start is to establish a good relationship with the bank or credit union. Now, once you've proven that you can manage your checking and savings accounts responsibly, then the bank may be willing to approve you for a secure credit card. These are cards that are backed by a specific amount that is held in your savings account. That amount becomes your credit limit and then serves as security for the bank. And then once you've used that card responsibly for a while, the bank then may, you would want to talk to the bank to see how long that needs to be, how long you need to have a secure credit card and show that you use it responsibly. And then the bank will unsecure your funds and issue you just a regular credit card. So it's a great way to kind of start if you can't get approved for credit cards. You can also look into a credit builder loan. Now, these are sometimes called fresh start loans, and they work like this. The amount you borrow is held in a bank account while you make monthly payments. You can access the money only after you have made enough payments to fully repay the loan. Now, with both the secure card and the credit builder loan, make sure you ask the bank how the account will be reported. Will they report the account history to all 3 bureaus? Will they report it monthly? You can also ask someone you know well to add you to their account as an authorized user or to be a co-signer. Now, with both accounts, you need to be cautious. Make sure you ask someone who has a good credit habits and that you do your part to use the account responsibly. As an authorized user, you have the right to use the credit card, but you are not legally responsible for paying the debt. So for this reason, it won't have a huge impact on your score and does not count as a credit reference. And it could also potentially hurt your score if the account holder doesn't pay the bill on time. And if you carry high balances, you can hurt the account holder's score. So you both need to kind of think of the other. Having a co-signer means that you're both responsible for the debt, as we mentioned earlier. So you must make sure that you always pay the bill on time and keep your balances low. Otherwise, you could both negatively impact each other if you don't use it well. Now, people who don't have much of a credit history often have a history of paying rent on time. You can't report rent payments on your credit report yourself, but you can use rent reporting services. So you can ask your landlord if they offer the service, and you may have to pay a fee. So make sure that you ask how it works and understand how the payments will be reported. Again, will they be reported to all 3 bureaus? Will they be reported monthly? And make sure that you pay all your bills on time. Monthly payments you make on other obligations like rent, your cell phone, utilities, they're not reported, but they can serve as credit references. So make sure all your obligations you pay on time, not just those that are reported on a credit report. All right, here's some credit tips. Keep your credit card balances low. Limit your charges to 30% or less of a credit card limit. Track your card balances as you're charging, or sign up with your issuer to receive balance alerts via text message or email. And this way you'll be sure to know when you're getting close to the 30% utilization threshold. Pay off debt rather than moving it around. Moving one credit card debt to another account might affect your credit utilization ratio. Balance transfers can be costly. Instead, stop adding to the balances and start a debt repayment plan. Don't close unused credit cards because you may end up shortening your credit history and reducing your available credit limit. Instead, stop using them and let them close out on their own. Don't open credit cards you don't need. Too many credit inquiries have a negative impact on your credit score. Plus, you risk adding debt that you can't keep up with. And pay on time. If you've been paying late or missed payments, start paying on time and get back on track. Set up payment reminders, or better, set up automatic payments so the bill would be paid even if you're not able to. For example, if you're out of town, It's a quick and simple thing to do, and it can really, really help. And protect yourself from ID theft. Be password smart. Don't use the same password for all your accounts. If they hack one account, they can enter all of them. Have a system that you can remember, but have different ones, and use strong passwords. Use the two-factor login authentication system. After you enter your login name and password, the financial institution sends you a text with a one-time code that you use to access your online account. If someone steals your password, they don't get the code and can't get through the second wall. If you receive a text with the code, you know someone's trying to hack your account, so it can help both ways. Invest in a low-cost shredder and shred any documents that have your personal information, bank and credit card statements, even pre-approved credit card offers you receive in the mail. Don't just rip them up and throw them in the trash, because thieves determined to steal your identity will go through it and even piece together ripped pages. Monitor your credit card and bank statements. Look for any suspicious activities, charges that you don't recognize, even small ones. The best way to protect your credit is to monitor your accounts and credit report regularly. The sooner you act on suspicious activity, the less damage control you'll have to do. And watch out for email, phone, and texting scams. Don't share personal and financial information to anyone who calls, texts, emails, or definitely shows up in person. Don't answer to text or calls from unknown numbers, and don't trust caller IDs that look like they're from a legitimate institution like the IRS or the Social Security Administration, because scammers can spoof those numbers. All right, well, we are at the end of our presentation. I just wanted to quickly mention our workshop evaluation. I believe Nevin will send a link to our evaluation. It's online, it's anonymous, and it's your opportunity to let us know, kind of give us your feedback about today's presentation. We value these evaluations highly. They help us improve our presentations. So we want to hear the good, but also the bad. So if you have any suggestions for improving our presentations, we love those suggestions. It's very easy. You'll get the link, you follow the link, you fill out the form. There's only the first, believe the first couple of questions are required. The rest are more comments that you can fill in. You don't have to, but we do appreciate those comments. So if you can, that would be great. If you can't, that's fine too. And then it's a short form. Once you're done, you just click submit and you're done. Again, this is totally voluntary and it's completely anonymous. And we do really appreciate it if you take the time to fill it out. And as promised, I told you I was going to tell you more about our Financial Education Center. So this is an awesome opportunity that you have that's online, that's available to you 24/7. You can access it from your computer, mobile, or tablet. It's completely free. It features a robust library of playlists that cover personal finance topics like budgeting, retirement planning, home ownership, banking basics, loans, credit reports and credit scores, and a lot more stuff. And you can also create a personalized playlist that's tailored to your unique financial goals and priorities. So you do just a quick account setup, and then you have access to a series of lessons that you can complete in just 3 to 10 minutes. They're all self-paced, they're interactive, they're fun. You can start a lesson, log out, log back in. It's really easy, and it's there for you anytime, and it's completely free. So take advantage of this resource that's available. And then this is our contact information. If you would like to work with a HUD certified housing counselor to learn how to maybe manage finances, improve or repair credit, help manage debt, or start a savings plan, or find out, learn about the home purchase process, you can find it on the HUD website. We are, again, a HUD approved housing counseling agency. So this is our contact information. I imagine that all of you are in Santa Clara, so I believe the Milpitas office is the closest office to you. Our appointments are all virtual right now. We're not doing anything in person. Our offices are still closed, but at some point we will restart, so you would have that option as well. We will continue with virtual, so we're not doing away with that, but this is our contact information, and my colleague Ramel is in Oakland. So if you're only interested in virtual, really either one of us, but if you would like at some point to have that option of the in-person, then I recommend that you reach out to me because I would be closer. And that's it for me. So I'm happy to answer questions. And
thank you, Alessandra.
Yeah.
For the great talk.
I can stop share. And I was going to also, if it's okay, share the link on the chat box for our Financial Education Center.
Yes, you can share that as well. Thank you again. It was a lot of information.